Hey everybody, good morning. Welcome to a new episode of Today's Stocks for Breakfast. So happy that you're here with me today. There's actually a lot to talk about considering that the market didn't really do that much yesterday. It's slightly bearish, kind of went sideways the rest of the day. Dare I say, looking to buy stocks yesterday, that the market kind of actually ruined our best laid plans for today, where the worst thing that could have happened yesterday was us to trade back into a melted candlestick where we just kind of rolled over and kind of drifted higher to the rest of the day. I'm actually going to show you, I'm going to foreshadow a little bit. We're going to talk about one of my favorite trading setups, but there's two parts to the trade. And I think that's what kind of makes it interesting is that very often, and I know I was actually a victim of this when I first started trading stocks way back in 2000, was not using all of the pieces of a trading setup versus just looking for a bull flag or just looking for a breakout. And it gets really challenging to have conviction in your trades, and you really don't see the kind of follow through that you want when you just kind of like little focused in on those little things. One of the biggest things that we do, or preach, for lack of a better way of putting it, is, and I hope that you're getting this out of these videos, is that in order to have conviction when you're placing your ideas, you need to build an argument. You need to put the pieces together. The high level view of that is when we talk about the stock market power pyramid, where there's the big three. I see John A is with us here today. The big three is the NASDAQ, the Dow, and the S&P. Then one layer above that is the sector rotation. Above that are the industry groups within the sectors, and then the individual stocks themselves. So if you want to elevate your trading and get to a point where you feel really awesome, I don't know if there's any other way to say that, but really more confident in putting on trades and confident on accepting risk and putting your money in the market, you need to have more than just one reason. And it's kind of an advanced thing that I talk about over and over and over again is, and this is, again, something you want to write down, the more distinctions you could make, the more opportunities will open up to you. And there's no other way to say it. And if you could imagine, I use this example all the time, but it's probably one that makes so much sense for trading. It's crazy, is that we talk about driving. And if you could remember the first time that you ever drove a car, I remember myself, I was just like looking at the hood and making sure I stayed in the lane, and you're kind of scared out of your mind and you just focused right there on that one thing. But then after a while, you have enough experience where you could probably drive 3 miles and not even know how you got there. You just end up there because everything and all those distinctions, the lights, the traffic, the stop, the other cars, the speed, the weather, all of those kind of things just become a natural part of making good decisions. And I think that's the difference between somebody who becomes an experienced, profitable trader versus somebody who's an experienced, angry trader, because they haven't learned to make those distinctions. They haven't elevated what they're learning. They haven't learned from their experience. They haven't stopped doing what doesn't work and do more of what does. So if you want to write that one down, that's a big part of what we're going to talk about today, because we're going to tie that into our tech stack. We're going to talk about setting up your software to spit out the best of the best ideas, provided that you already know how to find good ideas. All right. So we're just going to put up the disclaimer here, and we're going to come back in just 1 second. Okay, so as with everything that we talk about during the day, everything that we talk about here is for educational purposes. It's my job to help you make awesome, I don't know if I should go this way. It's my job to help you make great decisions. And it's your job, I'm going to give you a job. It's your job to ask as many questions as possible. And I can't express this enough. I want to help you. There's only one of two ways I can help you right now, is participate on these calls. Make sure you hit that subscribe button and you'll get alerts. I really appreciate that. If we're providing value, smash that like button too. But here's the deal. I promise to keep giving you as much content as possible. The level of that content and the level of that commitment is completely up to you. So while you're here on the call, make sure that you ask questions, but just as important, and I say this every day, leave comments below the video after the video is done or during. You can ask comments here, but it's a little bit more where I have more time to give you a deeper answer. Leave the comment below the video, and I promise I'll get back to you as soon as I can. Now, the one thing I generally don't answer is, what do you think about XYZ stock? The reason for that is I want to train you to understand how to find those ideas. If you just want alerts and that kind of stuff, obviously, we have a service for that as well. But the whole point of this is continuing education. The whole point of this is helping you make those distinctions. So I'm going to challenge you. And I do this with everybody in our private community. I'm going to challenge you to participate. I'm going to challenge you to let me know, what do you believe are the roadblocks stopping you from seeing your account growth go like this versus seeing it go like this, where, it's like a heartbeat pattern that's, you got to check the pulse on the person. So leave comments underneath the video, smash the like button, and I'm going to help you as much as possible. If you want to take it a step further, obviously click below into the description and learn about the New York method and how we do everything in a lot more detail. Completely up to you. Only you could make that decision, how deep you want to go down the rabbit hole into learning. So today we're going to talk about, you can see here like the fifth one down, we're going to talk about the tech stack. Last night we had a pretty intense coaching call. It's actually labeled our beginner coaching call, which we have every Wednesday afternoon. And we really got to the point where we were drilling super deep into finding stocks, game planning, and then you have this big list of stocks. I think I have to go this way. This big list of stocks where they're kind of the raw material of what you're going to be looking at during the day. So you have that list, but then after the market opens, the market kind of throws everything out of whack, where like the stock you wanted to buy goes up and the stock you wanted to like, nothing goes exactly the way you want it. So you want to buy the stock, it opens lower. You want to sell short the stock, it opens higher. By the way, we actually still have a sell short in the list today. But what I'm going to do is I'm going to walk you through a core part of what we had on our coaching call last night, which is setting up your trading platform in order to give you the information at the right time. So after the market opens, everything's going like this. And we're actually going to talk about D-Dog today to really, really bring this point home, so that whether you're day trading or swing trading, it doesn't make a difference. Having that right information spit out to you in the most efficient manner is really what's going to amplify the ideas that you could take advantage of. But here's the thing. You first need to understand what order flow is. And then number two, you need to understand how to create a game plan that finds stocks that, number one, have order flow, and number two, have room to go. Again, we're going to stick with the posted pad moments. Posted pad moment is, number one is order flow. Number two is room to go. Just finding a stock that's obvious that's going up is not enough. There needs to be profit potential to justify the risk. Please write that down. That is a giant part of trading that so many people that work really hard just don't get it. They pull up scanners. They pull up basic alerts of what stocks are up the most, which stocks, that kind of thing. But then they don't take into consideration, how far has the stock normally gone? How far has the stock already gone recently? And is the profit potential worth taking the risk? So write this down. Again, I'm going to challenge you to participate. If you want to get the most out of this and you want to get the most out of me, which I hope you do, number one is find order flow. Number two, is there room to go? Room to go means profit potential that justifies the risk. And if you remember, we talked about a couple of days ago, we talked about setting up trades and building that argument. If you're going to put your money in harm's way, what is the probability or the likelihood of your profit target being hit versus your stop loss being hit? And we actually, it was yesterday's video or the live stream from the day before that, where we spent a lot of time on how much do you risk per trade and what is the appropriate initial profit target based on what you need to risk. Then we also factored in position sizing, which was a big part of that. So if you didn't happen to watch that, click through the videos on the bottom and you'll see the video on profit targets. It was a really big comment that we had for newer members, especially because most members, remember what I talked about at the beginning, they only focus on one thing. And you want to know the biggest mistake that newer traders focus on? They only focus on the entry. Just give me the entry. Just give me the entry. I got news for you. The entry is not valid. It's not really worth it if it's not in the context of order flow. It's kind of like telling me how to use my blinker and tell me how to turn, but you're on the wrong road. It doesn't work that way. It's first ideas that are awesome. Only then do you look for entries. And I'm actually going to show you that when I'll give you like a little sneak peek. We're going to actually get into this. We're going to talk about this on the screen today, and we're going to break that down in a lot more detail. So we're going to hover on over and we're going to start talking about some of the news that's actually coming out today. And obviously that's starting out with the jobs data. You can see here now with the futures, we're actually down 11, maybe a little bit less than that. So big numbers today coming out. This has been a week of, I'm going to say indecision, for lack of a better way of putting it. You can see where the S&P futures are right now. But if we go over to the SPY, you can see it's been kind of a choppy mess intraday. Now, what's kind of interesting is putting the whole thing in context. And one of the members of our community yesterday, one of our moderators, Aldo, was talking about, let's all relax. You know, we're still, this is the first pause off of all-time highs. So nothing really to panic about. However, it has been mostly indecision. And the reason I'm bringing that up is because I'm actually going to jump ahead to talk about DKS. I'm actually going to jump down to the bottom over here. So you can see here that we're not getting a push up and a pullback, a push up and a pullback. And those are really the cleanest types of trades. So if we jump over to here to Dick's Sporting Goods and we're taking a look at the stock that, if we go back over the entire picture of the window, we're looking at a stock that is pulling back and pausing at all-time highs. So if you can remember what I just said, this is a critical aspect of trading. You need the edge, then you look for the setups. If you're struggling right now, you're probably trying to be a really good chart reader. Stop that. You don't want to be the world's best chart reader. You want to be the world's best trader. Chart reading is looking for those pieces of the puzzle. Trading is putting all of those pieces together and determining if you have an edge. So I'm going to use Dick's Sporting Goods as an example, and I'm going to use one of the other ideas that are inside of our daily game plan today, which, again, we talk about those a little bit later in our private call. So the context that I want to give you, and we'll go right back over to Dick's Sporting Goods here, is the fact that Dick's Sporting Goods is pulling back from all-time highs, setting up a new entry back in the direction of all-time highs. So I just want you to visualize this, and we're going to use, let's use BX as an example. The higher this climbs, you start to feel like you're playing musical chairs, and you start to need you know what, this is actually the best way to describe it. So if a stock normally does this, and the stock recently has done this, where let's say a normal move in the stock is $10. I'll just keep the math simple. And the stock recently over the last, let's say 5 to 7 days, has already done 8 or 9 and maybe even $10. And you're like, oh my gosh, I got to get involved with that stock. It's going up. I don't want to miss it. That's where fear of missing out causes some much bigger losses, because you're not timing your entries. You have, in that case, you have the edge first, but then there's no room between your entry and your profit target. So basically what you're doing, and you might self-identify with this right now, is you're putting on a lot of trades that are breaking even, or you're putting on a trades where you're making a little bit, losing a little bit, that just means that your timing needs to be a little better. So if this is what it normally does, and we just looked at BX where it went up like 10 or 11 days in a row, there's no room to go. There's no obvious profit potential. There's no probable profit potential. What we want to do is expand that distance. So now there's a reasonable edge and acceptable profit to put on that trade in the first place. So if we take a look over here at DKS, Dick's Sporting Goods, it just pulled back from all-time highs. And now we've expanded the distance between where we could possibly enter now and a new level of where the stock could potentially go. So that's a really big part of trading, is understanding timing in the context of order flow. So that's the first part. So the jobs data right now has been making a lot of stocks not have that edge. Maybe we'll get a little bit of volatility today where we can expand into putting on a new trade. And that's probably the best example of what I'm looking for every day. Next, if you didn't happen to see it last night, Lululemon absolutely blew away their numbers last night. At one point, it was up over $50 last night. It's still up $50 right now. You can see over here. So now it's actually punching, again, using this as an example, it's punching into new all-time highs, which is now giving us an opportunity to trade a stock that has volatility, which most stocks have not had volatility. So now, here's the challenge, okay? This is where the frustration in trading comes from for most traders. You don't have the tech stack. You don't have the tech setup to tell you, okay, Lulu is trading amazingly to the upside right now. Massive pre-market value. I can't wait to get in and trade the stock. And then the market opens and it just absolutely collapses for the first half hour of the day, the first 90 minutes of the day. And you're like, oh, I'm bidding for it because it's strong, and you lose money. I'm bidding for it because it's strong, and you lose money. Raise your hand if that's happened to you. I'm raising my hand because early in my career it happened to me. Like, I don't understand. The stock's strong. I have to get involved. I have to buy it now. And it just keeps melting lower on you. The only way to get around that, and the professional way to get around that, is to have your tech set up with two different things. I know I'm kind of jumping around here, but I want to make sure I get to the most meaty part of what we're talking about today. And Lulu is a great example of that. Okay. So what I'm going to do is I'm going to actually change this up, and we're going to zoom on over into the tech software. Okay. So we're going to go over to number one. We're going to take a look at this. So just for this conversation, this is 12 stocks that are kind of in my daily watch list. I watch them every day, no matter what. They're actionable. They have volatility. They have volume. But we're going to put this in the context of day trading. Now, this could be for a swing trade. You could do the same thing with different time frames. We're going to do this with day trading. So what we would actually have happen here now is, let's just say, I'll put it over here. And we have Lulu in the list right now. Oh. So what we're going to be watching on Lulu as the market opens, you know, this is actually kind of a cool example here. If I zoom this out a little bit. So let's just say, for argument's sake, we come into the day today, which we are. You're setting up your screens. These are 60-minute charts over 3 days. Okay, that's the window that I'm watching. So this is the bigger picture where I'm not watching every single uptick, downtick, wiggle and jiggle. I just know that I'm coming into the day. I want to be a buyer of the volatility and the volume and the catalyst. Somebody asked about a catalyst before, and Lulu has a good catalyst today. Same thing on the opposite side of the trade is GME. So remember, everything we're doing is we're building arguments. Absolutely critical for you to say every trade needs to have a valid argument for me to accept risk. Now, a bull flag is not a valid argument. A bull flag in the context of bullish order flow is a good argument. A bull flag in the context of bullish order flow that also has room to go, where the profit justifies taking the risk, that's a great argument. Adding on top of that argument, whatever stock you happen to be watching, that sector and industry group, 5 of the 7 stocks that you watch are also green and trending higher. That's the best argument that you could make when you throw the market on top of that. So really start to think, how deep are you going in your argument to find order flow? So now, taking that over here to having the proper tech stack to make this as simple as possible, Lulu opens, and this is actually probably a perfect chart for it, whether it's the catalyst or not. Lulu opens. That first hour opens, and here's the opening price. And if you've been a regular subscriber to the channel, you know we spend a lot of time talking about tape reading. Tape reading could be that entry price that you have. It's going up or down. You know better than anybody if that stock is strong because you own it and your heartbeat's going up or down with the trade. If you're not in the trade and we're looking for the ultimate time, we are looking for longer-term order flow to be in sync with today's order flow. So if the longer-term push, the catalyst that we have right now is Lulu pushing into all-time highs, we need to have a line in the sand. That's the tape reading, which in this case here, for day trading Lulu, we're going to be watching the opening price each hour. So as that red candle starts to unfold, and we'll pull this out just a little bit easier so you can see it, this first hour, I'm like, all right, for most of that hour, I'm not looking to buy Lulu yet. I am not going to be bottom fishing. I'm not going to be buying this thing on the way down because it's still going down. Next hour opens up 10 o'clock, 10:30 to 11:30. Not yet. I know I absolutely want to be long this stock today, but not yet. It's still going down. Stop trying to bottom fish. Stop trying to get the perfect bottom tick where you want to be the hero. Stop being a hero and start being a trader. Find the right spot. All of a sudden, this hour now from 11:30 to 12:30, Lulu finally hits that level where your line in the sand is 9:30 to 10:30. 10:30 to 11:30. It just keeps resetting every single hour. Finally, patient. The volatility bottoms out. The volume on the selling side, profit taking, probably bottoms out. And that candle now on that 60-minute chart, which my candles reset at the bottom of every hour. If your software doesn't, you can actually just use the 30-minute candles for the same effect. So there's no excuses. Bottom of the hour, bottom of the hour. We're going to actually now forecast, predict, script how we're going to be looking to trade Lulu today. We might not even buy it today with the volatility. If it keeps going down, if it doesn't meet this criteria, if the tape doesn't tell us, okay, Pete, it's time to get in, put your hard-earned money on the line, because now we have the signal that we're looking for. The sellers, the profit taking has dried up. Now we can start to look for entry signals. That might happen in the first half hour. Then we use what we call our SMS strategy, which is our 60-minute swing, where if we get that criteria and we get the entry signal that we're looking for, and that green hourly candle remains in play that entire hour, think about this. You're not watching this. You're not watching this. You're not watching this. You're like, no, it's doing exactly what I want. I have the catalyst. It's staying above the line in the sand that I watch for tape reading, and it's still performing. So you just sit back, you have a little bit of coffee, as long as it's performing. Now you have to manage the downside. We have other ways of managing the profit. We have two different ways. There's momentum trading and there's trend trading, and we have what we call a profit maximizer. But all of these pieces are what separate you. Now, I want to just come back on the screen here for a second, and I'm going to pull up. We're going to go into one further step on my software. If this is a lot to you, okay, and I'm speaking to you because I know somebody on this right now is like, he's like hitting me like with a fire hose right now. Yeah, I am. Do you want to be here and be lazy and just look for one thing, one reason to put on a trade, which is, and I'm going to give you the worst reason, which broke traders use, okay? The worst reason is ding, 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 9:30, the market opened. I got to go look for something to trade. I got to put on an entry. Ding, 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 ding. It's Monday. I'm looking to swing trade. I have to put on a trade because the market's open. That is the crappiest reason in the world. Just because you have an account and the market's open is not a reason to trade. You have to have a great idea. If everything I just said has your head spinning, it just means you need to watch the video again, because I just walked you through from start to finish. Now, we didn't talk about catalysts and order flow and all that kind of stuff. I just walked you through the highest level of the process of deciding if an idea is worth your money. So think about this. And I talked about this yesterday. I had a business meeting last night, and we were talking about new traders coming into our private community and new traders deciding to become somebody who wants to make the stock market make the money for them, right? You want to buy stocks. You want to make the market make you money. Now, think about this. Think about you have, I'm just going to throw a number out there. Think about you have $100,000 and you just met somebody yesterday, and that person says, give me your money to manage. And you're like, all right, you seem like a nice person. Let's use Catherine Goodson as an example. All right. Catherine's a part of our community. And you're like, all right, Catherine, I have 100 grand. It's really important to me. I don't want to lose any, but I understand taking risk. And I want to give it to somebody who really knows their stuff because I'm still learning. And Catherine says, and you ask Catherine, well, how long have you been managing money? How long, what's your background? What do you have a track record? Any of those kind of things. What strategy do you use? And Catherine says, well, I went to Barnes and Noble's about 2 weeks ago and I bought technical analysis of the markets. So I've basically been managing money for about a month. And we pause for a second. And you're like, I don't understand. You're managing money for a month, but you want my $100,000? What do you know that you want to manage this money? And that's the path that a lot of newer traders take. They do the littlest amount of work to learn the skill. So I want to cycle back to what I just talked about. If what we just talked about was confusing to you, if what we just talked about was maybe a little bit too much information for what you're using right now to make a decision, you just got to peek behind the curtain of what it means to be a professional trader. There are decisions. They're not hard decisions. Go back to that driving the car example of first time you're driving, you're scared out of your mind. You just want to get home. Second week, month, year, all of a sudden you drive 5 miles and you had no idea how you got there, because all of the decisions that you put into driving and putting yourself in that 2,000-pound vehicle and driving 80, they're all second nature now, and you're confident doing that. Think about that right now. If I just described stuff and walked you through the process and it was new, it was complicated, it was different, It just means that you need to learn a little bit more. It means that you can't be that person trading for 30 days, ready to put your money in harm's way. And if you do, start small. I don't use the word suggest a lot on these calls, but I suggest you start out with 50 shares. I suggest you start out with 100 shares. I don't care if you have $100,000 in your account. Your goal when you start should be to learn how to look at the market and make decisions, and then try it with small share size. Try it with small share size. And you know when you should start to size up? When you actually have a string of winners. What about winners? How long should you have winners? At least a couple of months. Every single person pays tuition to the stock market or whatever market you happen to be trading in the form of profits and losses, and especially in losses. There's no reason for you to spend $25,000 or $50,000 to the market in losses when that tuition cost is completely up to you. Just please listen to what I'm saying right now, because I don't care if you have $1 million or $3,000 in your account. Learn with real money, but keep that position sizing small while you are identifying your edge, while you're able to make more distinctions, while you're able to put more pieces together. And you'd be like, wow, I made money on Monday, Wednesday, Thursday, Friday, lost a little bit money on Tuesday, but I became net profitable at the end of the week. Okay, that's a good start. So all of what we're talking about right now is how to put those pieces together. We're going to talk about the second piece of the tech stack today, which is a really underutilized part of most trading softwares. And it blows me away when new members come into our community that they don't even use it, never mind understand how to use it properly. And I'm going to show you what that is right now. Okay, so what we have on the screen right now is this is actually the main screen that I trade off of. Okay, so this is, I have multiple monitors, but this is actually the screen where I actually place my trades. Now, what's on the charts is not as significant. What we're going to talk about is what's here. And I'm going to zoom this out a little bit so that it's obvious. So if you remember what we talked about before, we spent a lot of time talking about doing your game plan, coming into the day, and we just walked you through how to use that hourly chart to set up your trade. So this is the second part of your tech stack, okay? The second part of your tech stack is understanding having the right columns and understanding how to sort those columns. Now, probably the most important ones, if you're a day trader, if possible on your software, have this column in there. This column is the average true range. Okay, so I'm just going to come back on the screen for 1 second. The average true range is what the stock normally does from low to high. So let's say you're a day trader. And remember we talked about before, and we talked about it in the context of a swing trade, but how much room is there to go based on what the stock normally does? If you have average true range and the percentage of average true range on your screen, if the stock normally moves $5 during the day, just for argument's sake, and now it's let's say 10:15 in the morning, you're a day trader, and it's already gone, and I'll show you the screen here, already gone 95% of what it normally does. We got to ask yourself, what is the argument for me to put on a trade right now, no matter how beautiful the sun coming down is hitting your enter key, all of that looks when the stock has already gone 95% of what it normally does? This is, again, you need to build that argument. So two things. You need to understand, while all of the other stocks in the sector are lit up, the market's green, the ticks are pushing plus 1,000, the VIX is going down, I still think this has room to go, versus the whole sector's a mess and that stock just happened to have a good morning, I better step back. So this is how you make your software spit out good ideas after the market opens. Because again, raise your hand. Sometimes you have the best laid plans in the morning, the most amazing, amazing game plan, and it gets shot to hell the first 5 minutes the market opens. This is a part of the software. Now we're going to go into the next part of the software. And this right here, these two columns, net change percentage and net change from the open. Now, net change from the open is not going to light up anything right now because it happened. Obviously, we're talking pre-market here. So now here's the biggest part of what I want to get across, okay? You have your list of stocks when the market opens. You know that you want to be a buyer of these stocks, right? Maybe even want to short sell. Like today, we actually have Boeing still as a short sale today. You want to go into the day and you're like, okay, I want to be a buyer, but as soon as the market opens, that stock starts to go down. Like, I just spent 17 hours game planning and the stock is going down. It just blew all of that out the window. Okay, take a breath, say, I'm a pro. I know exactly what I'm doing. Watched Stocks for Breakfast yesterday. Pete told me to first set up all of the stocks that I want to watch in this. Okay, so we go back over to this. You have that big list of stocks. So no matter what happens in the market, you know that those are the stocks you want to buy when the market opens. So now, no matter what happens, you're looking for that first hour candle to be green, or you're just going to take a step back. So you're just casually now sitting back saying, okay, nothing yet. Yesterday morning, most of those stocks were red. So you just take a step back. Then maybe the 10:30 to the 11:30 hour. But it gets even better. When you set up your tech stack and you have your columns set up properly. Again, we're watching Lulu here continuing to trade higher. This is time and sales on the right-hand side, by the way. You have the tech stock set up. These are the two proper columns you want to make sure you have. You want to have net change percentage from the previous close, and you want to have net change percentage from today's open. So think about what that's telling you right now. You came into the day, you did all the hard work. You put the game plan together. You order flow, the right timing, has room to go. All right, those are the stocks I want to watch. Now the market opens. Some stocks are going up, some stocks are going down, some are red, some are green. But here's what you're looking for. You're looking for net change from yesterday and net change from today's open. So that means it's positive from yesterday and positive from today's open. So that means today's order flow is in sync with yesterday's close, which was positive, and the reason you put it in your list in the first place. So it has bullish order flow. It's positive from yesterday's close, so it's following through from yesterday, and positive from today's open, which means that right now that candle is also green. Now here's tying this all together, and we could talk. You could do this in Lulu today. GME, which had bad earnings, came out trading lower. If you're a short seller, if the stock's available, here's the thing. I just showed you the list of 12 stocks, and most of them were red from the open. And you're like, the whole game plan's out the window, right? But what? What if one of those stocks had green in both of those columns? What if just one out of the 10 stocks you have in your list is net positive from yesterday's close and net positive from today's open? That one stock is doing exactly what you want it to do. And you want to know what struggling traders focus on? Oh, Pete, 9 out of 10 stocks, nothing that I thought they were going to do. I'd be like, but one stock did exactly what you thought it was going to do. That's how setting up your software completely changes the game. Now, we just touched on one thing. Our call last night was 2 hours, so you could imagine how much goes into setting up the call and setting up your software, because you have different screens and different watch lists and sectors and that kind of stuff. But think about this. If you understand order flow, if you understand how to read the tape, if you understand how to build that argument to create a list of stocks you want to watch in the first place, then the market opens. You have your watch list with the right columns. You have average true range, net change from the open, net change from yesterday. That's the baseline. But then if you really want to get fancy, then you could say, which of those stocks also has the largest green candlestick right now on the 5-minute chart? So again, I'm specifically talking to day traders right now. What if it meets all of those criteria and you have the largest green 5-minute candlestick right now? So the largest percentage. So now you're also getting a stock that's moving up at this second with all of that other criteria. Let's take it a step further. You also set up your software to say which of those stocks also had a spike in volume that was at least 100% on that same 5-minute candle that has a green candlestick that's positive from yesterday's close and positive from today's open. And if you go back to the very part of what I talked about before here, also has a green candlestick this current hour, because you could have that other criteria. So again, I'm gonna really bring this home, because I have to leave and go to my other coaching call, a private community. If you want to join us in our pre-market game plans, click the link below, and I think it says New York Method or something like that. So now here's really where it gets ninja. This is really where it becomes exciting. So let's say, for argument's sake, again, all of the pieces, right? Think about driving. All this becomes second nature after you've been exposed to it, and we walk through it every day. I talk to you about that's good, here's why. That's not good, here's why. That's good. You start to get the repetition, right? So now here's what we're going to finish up on. Good stock, meets all the criteria in your game plan. Positive from yesterday's close. Big green 5-minute candlestick, but red hourly candlestick. So raise your hand if you bought a stock and it just kept kind of like melting lower on you, and all of a sudden it's not doing exactly what you want. Once you have the chart set up like this, it becomes infinitely easier. And again, this was a 2-hour call last night. I'm trying to give you as much stuff to think about between now and the next time you log into your software. So here's where it becomes magic. Here's where it becomes something special. You have everything in your watch list, your setup, your charts, your everything you'll be looking at. All of a sudden, something like this happens yesterday. Okay. And this is really where you drill it home. Now, this stock has been in our watch list for a while. I'm going to pull it up here. This stock has been in our watch list for a while. And now you start to see this. This stock went from 132.50 to 141 yesterday. And you're like, oh gosh, it would have been I would have loved to have had this trade yesterday, right? Well, when you have everything set up the way we talk about, all of a sudden, first hour is selling. Second hour perks up a little bit. Then you have 2 hours where it's screaming at you, look at me because I meet all of the criteria. This kind of stuff is what separates somebody from a struggling chart reader to somebody who understands why they have certain stuff on their screen and how to use it at the right time. I have to cut the meeting right now. We have to head over into our private meeting. If you want to, first of all, I want to, as I do every day, I just want you to know how much I appreciate you being here with me and joining me every day, because I try and pour my heart and soul into this so you get the greatest value. If you find these meetings valuable and you really enjoy being here, please do me a favor, click down and subscribe, hit the alert button and smash the like button to let me know that we provided some good value today. But I just want to challenge you. I want to challenge you to say, what am I missing? I want to challenge you. You're here. It's 7:30 in the morning. Now it's 8 o'clock. You're here. You have the desire to want to put all these pieces together. I'm telling you, get a legal pad and just sit down in quiet time for half an hour and ask yourself, what am I missing? Ask yourself what you're missing, and then bring those questions. Bring the questions here. If you want, again, I know a few people on these calls have already become part of our private community. Ask yourself what you're missing and ask if you think that we can help. Have an awesome, awesome day, everybody. Thank you so much for joining me today. I'll speak to you soon. Have a profitable day today.